Welcome to another episode of the Next Gen VC, a podcast from GenZers to GenZers. We aim to be the transparent window in the mysterious world of VCs and startups through authentic conversations with the very individuals that make them. If you enjoy our content, do support us by hitting the subscribe button and give us a follow on LinkedIn, Twitter, and Instagram at NextGenVCPod for updates on the latest episodes. Today, we're joined by Edgar, founding partner of Enzo Ventures, founded and run by a team of Gen Z entrepreneurs. Enzo Ventures leverages a continent-wide network of operators to support early-stage founders across Europe. Before Enzo, Edgar co-founded and sold the biztech startup DiHola to Social Labs, of which he is now a board member of. In addition to sharing his experience of starting his own fund, Edgar also shares why he thinks that being an analyst is not the best way for Gen Zers to break to a VC.
Edgar, we're so excited for you to join us. Thanks so much for coming on with us on the podcast.
Hello, it's a pleasure to be here with you.
To get started, could you please give us a very short introduction, maybe about yourself and what you do at Enzo Ventures?
So I'm Edgar. I'm a Spanish guy from Barcelona, living in Madrid actually. I decided to start my own company when I was 18 years old. At the same time, I was studying at university, concretely in the University of Barcelona. Then I ended up my studies in London, in Regent's University. And at the same time, as I was saying, I decided to build up my own company when I was in my first year of university. It was a tech company with the main vision of digitalize the way people exchange digital information between them. So we wanted to make it more flexible and more efficient, the way people exchange the business cards. So we developed an app called DiHola from Barcelona. We raised a small round. We were 18 at that moment, and we grew up the team until being just 10 people in our team. After that, we joined an accelerator program in Barcelona as well. And after a lot of up and downs in our venture, we ended up selling our company in February 2020 before COVID situation. In the meantime, I was doing a bit of angel investment. I did 5 to 10 tickets, small tickets into Spanish companies, as for instance, Globo or Buddy, which are one of the most important ones in Spain. I found it super interesting, and I really love to professionalize this activity after selling our company. So together with my partner, Ivan, we decided to build up from scratch our own venture capital fund. We wanted to jump into the industry, but in our opinion, it would be really tough to get into the industry as, following the traditional way, joining as an analyst in a tier 1 VC, for instance. It's really hard. So we decided that maybe building our own venture capital fund with a small bunch of money had a lot of sense for us. And we wanted to demonstrate to the market that we know how to source deals, we know how to invest, as I said, with a small pot of money. And after that, we aim to raise a bigger fund, So we did it. In just 6 months, we were able to raise €1.5 million, mainly from us, and together with a bunch of investors. And we had the chance to start investing into startups across Europe. And we wanted to build a different kind of VC, We wanted to disrupt the industry, being young, offering a different value proposition as other solutions in the market. And we started, building a community-based fund. So we consider ourselves, Enzo Ventures, as a community-based fund, first of all. What does it mean? It means that in the seed stage, it's really important to have a really solid and really strong community if you want to bring value to your investees. So before doing that, you have to build your community. And we decide to partner together with 30 operating partners, we call it like that, which are people from different industries, different geographies, aiming to help our portfolio companies and indirectly to bring us qualified deals from different countries in Europe. So we leverage ourselves into this community, and we have this power to get into the most qualified rounds or deals across Europe thanks to that. And another differential point we realized and we wanted to demonstrate to the market is that we are actually the youngest investors, the youngest GP in Spain, and one of the youngest across Europe. So we wanted to take advantage from it. Obviously, it has negative points because being young, it's not always positive, but we wanted to make it positive and we wanted to see it positively. So one of our value propositions is to have this flexibility and this accessibility with the founders we work with. because we realize that in tech, founders are younger and younger. So it's really important for them to have this generational connection with investors, which is really uncommon because investors are usually, old-fashioned people with more than 50 years old usually. So it's really weird to find out this kind of young investors in your cap table. So for them, it's incredible because you're chatting with them or you're helping them as a friend. So it's awesome for them to have this generational connection. And the third differential point at Enzo Ventures is our international mindset. All right. So as you might know, the Spanish ecosystem is growing a lot in the last few years. But we are still watching out funds just investing in the local ecosystem in Spain. Doing pretty well, pretty decent returns. But, we need to change that paradigm and we need to start making international deals from Spain. We have to be brave and we have to attack Europe with no fear. So this is what we wanted to do firstly. And our portfolio is composed mainly by 50% of our companies internationally. So we are investing in across Europe. We are keeping 10% of our fund to deploy capital into US or Latin America as well, which we think it's pretty hot at that moment.
No, that's super interesting. And actually, one of the most fascinating things we found about Enzo Ventures is exactly like you said, the generational focus. Why did you decide to focus on Gen Z? And why do you think it's important to have a Gen Z focused fund in terms of, what issues are faced by Gen Z founders that might not be faced as much by other generations?
Yeah, it's a good question. Before that, I have to tell you that we are not just 100% focused on Gen Z entrepreneurs. We can invest in other kind of entrepreneurs, older ones. But obviously, as I said, we really like to work with young entrepreneurs as us, for instance. As I said, now after doing 9 investments in 9 young entrepreneurs, we realize that for them, it's really important to have this accessibility with the investors, especially at the seed stage when you are early and you are just starting out. So it's really important to chat with your investors, to ask for something, ask for opinion, to help them in different aspects in the company, as for instance, recruiting or other important key areas in the company. So yeah, I think that it's really positive if you are a newborn entrepreneur to partner with us because we are going to treat you like a friend. So it's something really curious, different. And I think that it's really working out properly.
That's definitely super exciting because, Gen Z sometimes are passed over by traditional investors because of kind of their lack of experience per se. But you're also technically really young, as you mentioned, in terms of setting up a fund. Most people your age don't have a fund. And if they are in venture, they're at the analyst stage. And that probably came with challenges like, setting up a fund. What would you say is kind of your biggest challenge when you started Enzo Ventures and how did you kind of overcome it?
It's really challenging and it's really tough to raise your first fund when you are under 25 years old. As I always say, there are mainly 2 ways to get into the industry. The first one is the traditional one, when you have to be hired by a fund and start, from the very bottom of the funnel, starting as an analyst and then, scaling up until being a partner, which is the traditional way. And another way I always recommend to young founders or young VCs, which is to start building your own track record. Start investing small amounts of money, as a business angel, for instance, or even you can raise money from, as we did, raise money from investors and starting out a small fund, deploying capital with a small checks as well. You can do it in 2 ways. But it's really important to, as I said, start constructing your own track record, demonstrating to the market that, you have this experience and you have this talent to invest into companies. And after that, you will have more opportunities in the future if you demonstrate that you know how to invest. And obviously, on our side, we realize that it's really tough to raise. Firstly, your first fund, it's harder because you don't have any track record. And all the investors you're raised from are betting on you mainly from your personal side, let's say. Obviously, we sold our company before, and that event helped us a lot in terms of fundraising because we've been entrepreneurs before and, investors in our first fund we're really confident about our vision of backing entrepreneurs, and we know how to help them, how to overcome problems and so on. But it's the harder one, it's really tough to raise your first fund. After that, once you demonstrated to the market that you know how to invest and you have demonstrated decent returns to your investors, it's really easier to raise your second fund, especially because you can take profit from your past investors and you can raise again from them. And it's something that it happened to us. We raised almost 50% of our second fund, which is a 20 million euros fund. I didn't say that before, but it's a 20 million euros fund, and we raised half of them from our previous investors. And we are now following the same thesis as the first one, but obviously with higher tickets. So it's what we wanted to do in our first moment. We wanted to demonstrate, we wanted to build this track record, and after that, raise a bigger fund, higher fees, and we can dedicate ourselves full time on it.
You mentioned that a huge part of Enzo Ventures is the community around it and the operational leaders that's part of that community. How did you go about convincing them to join the team? And how did you go about selecting who you wanted to reach out to in the first place?
Yeah, so our value proposition for them, it's really clear. I mean, we are partnering mainly with mid-level managers in unicorns or big tech companies because it's easier to be in contact with them, okay, for us. We realize that for them, it's really exciting to partner with the young VC because they have this vision of what is happening in the early stage. And they always say to us that in the near future, they want to raise their own venture capital fund. So it's a good starting point for them to start collaborating with us. And apart from that, some of them are actively investing in companies. So we can bidirectionally share deal flow between us, which is something really interesting for them and obviously for us as well. So it's a win-win partnership. And obviously, on top of that, I would say that our reward we are offering to them, it's really exciting because it's a success fee. It's a carry we offer to them in each company they bring us. And yeah, they can make a decent amount of money if they are really well connected in the ecosystem and they can help our companies. And the way we hire them or the way we source the best ones, it's through our community. We use this referral method, and one operating partner recommends us another operating partner. So we are constantly and progressively improving our quality. And now, for instance, we have people from checkout.com or other big companies in our operating partner network, which is something super interesting. And I would say as well that if something is not working out properly, if someone is not really well connected with Enzo Ventures and it's not collaborating enough, we can replace them with no problem. So we have a contract between us which regulates this activity together. So it's something that it's beneficial for us, first of all.
I love how community is so core to what you do, and kind of building networks, as you say, is so important in terms of deal sourcing. But when you're a first-time founder, like you were once upon a time, you don't have that network to support you. You don't have that community around you because you don't know enough people. How did you go about over time kind of curating, building that network? And was it a challenge when you first founded your company?
Yeah, it was really, really challenging because in my case, we were at university at the time. So we were, I wasn't a student together with Ivan. We were students in the same class. So we didn't know anything about this Spanish startup ecosystem, that was outside us. And the best way we could do it was through joining an accelerator. So I recommend really, really hard to join like kind of accelerator program if you are a newborn entrepreneur, because obviously it's something that it will cost you a bunch of equity in your cap table, but it's really important for you because they will connect you with other peers in the industry, and you will have this 360 vision of what is happening in the market, what is happening in the ecosystem. It was really helpful for us, to be honest. The accelerator we joined was called Connector. It was the same accelerator that Globo joined at the very beginning. Globo is one of the main Spanish unicorns. So it's a really good accelerator here in the local ecosystem. For me, my tip would be that if you don't know anything about the ecosystem, you should try to find out something that will connect you with local ecosystem in that case, no? Because it's really important. Even though it will cost you a small part of your equity, it's a good starting point, and it will connect you with potential investors, potential clients, potential everything. So yeah, it's my tip on that.
And for perhaps our listeners who want to join VC, I really like your tip about how you should build your own track record instead of just considering joining as an analyst. You did both Enzo Ventures, but also angel investing. Do you have any views on, the pros and cons of both, and whether one should start with angel investing first, or how should you go about deciding different options?
Well, it depends on your net worth, obviously. Because if you have enough money to deploy, it's much easier, and I would say much flexible to start investing your own money. It's harder to position yourself as an angel investor and to get qualified deal flow. Okay, so in our case, when I was an angel investor, I could invest in Globo, for instance, or in Buddy, mainly because I had this personal, relationship with the founders. Otherwise, I didn't have the chance to get into these overcrowded rounds, So I would say that if you don't have enough network, I would say that you need to create your own venture capital fund and start working on the brand. You have to position your fund as a different kind of fund and to offering a different value proposition and to start receiving a different deal flow and the rather deal flow, But it will depend. I know people, for example, in the UK that with just 26, 27 years old, they build their own venture capital fund and they build their previous track record through angel investing. So it will depend on your network and obviously on your net worth as well.
You've experienced both sides of sitting on the table, getting investment from investors, and then also investing in founders. What do you think traditional VC funds do wrong when it comes to even engaging with Gen Z founders and entrepreneurs and then also investing in them?
Well, I think that they are following this old-fashioned approach, which is something that it's not really Gen Z founders don't like this kind of approach because it's like more financial or IB approach, which is like not founder friendly. Sorry. I think that our value proposition is completely different because when we are chatting with them in our first call or in our first meeting, we offer our help in a different way, our support in a different way. And we are like a friend, and since minute one, we are offering solutions. We are offering value to them. For instance, whether if we invest or not, we can offer value from the very, very beginning to them. It's something that the rest of funds don't do. I mean, it's completely weird. And in our case, we like to support companies because we pretty believe in the young talent. So if you are chatting with them and we see that there is a potential link with someone we know or a company we know in commercial terms or whatever, we're going to make you an intro. I mean, it's not important for us. I mean, we pretty believe in our network. So it's something that we differentiate ourselves compared with other funds. We start supporting our companies. We start supporting our founders since minute one, whether we invest or not.
In a market like today, where there's more capital flowing through Europe than ever, you seem to have positioned yourself very well in being able to kind of appeal directly to Gen Z, and especially if they're going to be the next generation creating the next unicorns in the next 5 to 10 years, it's definitely a good position to be in. But if you wanted to take a step back and put yourself in your shoes when you were 18 years old, what would be your biggest piece of advice for yourself when starting out in kind of your professional career?
Really good question. One mistake I made when I was 18 years old and I was starting out my own company was that I was too focused on raising money instead of getting clients, getting revenue and increase our revenue. And this is something that I would change if I would start again, because it's really time consuming to raise capital, and for the CEO, it's really important to be focused in the core business of your company, which is growing your revenue, growing your clients base instead of dealing with investors constantly. And it's something that it happened to me, and I think that because of that, we needed to pivot really soon because, I was dealing too much time with different investors in Spain instead of getting clients.
When you meet founders for the first time, how much do you think about the founders themselves and the talent in front of you versus the idea that they have? Because Enzo invests a lot in kind of early stage companies, and perhaps in earlier stages, there are more opportunities to pivot. So do you focus more on the founders themselves or the company that they have in mind?
No, fully in the founders. I think that when you're investing in pre-seed or even seed stage, the most important thing is the founding team. Why? Well, it's really clear because it will be crucial moments, with a lot of problems. And the only people who can overcome those things are the founding team, the partners, And this is really important. When you are investing in pre-seed, you are not focusing in the business model. You're not focusing in the product because it will change a lot during the time, And it's really important to meet founders personally to see how big is their ambition and to believe in their vision. It's why we invest in a company. It's the main reasons we invest in a company. And after that, obviously, the second thing that we take a look at is how big is the market? Can that solution change dramatically the market who is addressing? And apart from that, the rest, it doesn't care. I mean, it's the most important thing is the founding team, the founders of the company. And the second one, I would say, it's how big is the market you're addressing.
Has there been any startups you worked with that had a terrible idea, but you loved the founding team, so you invested in anyway?
Yeah, of course. I cannot say which one, but yeah, I would say a couple of them in our current portfolio have brilliant founders, but we were not totally aligned with the value proposition of their product. And we end up investing in those companies. So yeah.
In those cases, how much do you try to influence the founders?
Well, I mean, we are trying to be hands-on, obviously, but it will depend on each case, because we met, some founders that we want to take their own way and, work totally alone. But in other cases, we found out founders who need a bit more help on our side. So it will depend. We are totally flexible in that aspect. So yeah, we can adapt.
You work with a lot of Gen Z founders. Is there an area that you think Gen Zs are particularly well placed to do well in that market?
The most promising market for Gen Z founders is B2C, because they are changing patterns in how people consume different things in our society. And they know pretty well because they've been consumers in their first hand, I pretty believe on that. And I remember one day I was chatting with my partners at Enzo. I told them that, our portfolio is mainly composed by B2B companies because it's really common in Europe to invest in those kind of models. I always say that the day we invest in one B2C company, it has to be composed by Gen Z founders because they know how to attack that B2C market and how to change patterns and how to make bigger the market they're addressing at. So yeah, I would say that B2C markets are more attractive for these kind of founders.
That's super interesting. And it's great to see how kind of the wider macro trends of Gen Z changing how, consumer behavior takes place is wielding its way into venture. But now it's time for the quickfire would you rather round. So we're going to give you about 20 to 30 seconds to answer each of these questions. Are you ready?
Sure. Yeah, go ahead.
So firstly, if you could live anywhere in the world, where would it be?
I think Barcelona, my hometown.
What would you be doing if you weren't running Enzo?
Good question. I would be working on tech, but in the other side, being a founder, I guess.
That's cool. But if you could pick a favorite startup in your portfolio, what would it be?
Wow. I think Valio is one of my favorite ones. Valio is trying to, it's an ed tech trying to change people are consuming financial education, and it's addressed to Gen Z population, and they are offering kind of trying to democratize this financial education for this target of people. Yeah.
What's your most listened to song on your playlist?
Good question. Julio Iglesias, Julio Iglesias, it's one of my favorite artists. It's a Spanish singer.
Any favorite titles from him?
Abrázame. in Spanish. Abrázame.
We'll definitely have a listen after this. What are your 2 to 3 top tips for university or Gen Z founders who want to raise a fund?
Wow, good question. You need to demonstrate as soon as possible because market is moving quickly.
Super interesting. And it ties in very well with what you're doing at Enzo. So we're really grateful for having you on the podcast. Thank you so much for coming on and chatting with us. It was super insightful, and I'm sure our listeners will have really enjoyed this episode.
Thank you very much,
so much,
you guys.
Edgar.
Thank you for listening to this week's episode of the Next Gen VC, a podcast from Gen Z to Gen Z. If you enjoy our content, do support us by hitting the subscribe button and give us a follow on LinkedIn, Twitter, and Instagram at Next Gen VC Pod for updates on the latest episodes. We'd also love to hear your suggestions on guests and topics you want to hear about. So feel free to get in touch with us on any of our social media platforms, linked in the description box down below.